Today I'm going to do a quick analysis of TE connectivity. The stock symbol is TEL to see if it could possibly be a good stock to buy at this time. I don't really know that much about the company, and I suggest that if you're interested in buying the company that you learn more about it. So basically it's a Swiss-based company, and they produce sensors and different electronic connective products for use in harsh environments. They do make some pretty cool stuff. They can make some wires that are hair thin that are used during heart surgery, and instead of taking weeks for recovery, it'll take days. They make products that can go underwater, use in the oil industry. They make other products that can be used in a harsh environment like on Mars. So it's an interesting company to check out, and they're very innovative. So anyways, the first thing we want to look at is the stock price. Right now it's at around $99, and then I'm going to go to the Beat the Market Analyzer. Up here is the address. Then after you click Analyze, you'll come to this page, and so I'll put in TEL. So it comes up here with the analyzer recommended price to buy is $81.91, and the stock price is again around $99. So this is telling me right off the bat, just give me an idea that maybe this stock is overpriced right now. If we look further into the information, we can see a company rating. So 70 points and above is a good potential investment. This stock has 75 as a rating, so it's not great, but it's pretty good. If I look further here at the company rating, I could see that it has good scores out of 17. It has 16 for upward price per share, nearly perfect score here for return on equity. EPS is not very good. So this one's only around 8 out of 16. Ability to recover from a market crash or downturn is a perfect score here, so it has good recovery. This means that it can usually recover within about 3-4 years from when there's a large crash. So around 2008, let's say, it recovered fairly quickly, and to have a high score here. Return on invested capital, its score is not very good. The margins, gross margin is good score. And then PE ratio, PG ratio, this just tells us if it's a good like long-term growth stock, which it's saying that it's not right now. Okay, so I'm going to click here on the symbol, and I'll go into more details about each category. Okay, we're at the price upward trend for 10 years, and you can see that it has very good consistently increasing price over the past 10 years, so that's a good sign. The earnings overall, the 10 years it has increased. You can see that there's some volatility from year to year. This takes the average yearly price, but so this might give some opportunities to buy low and sell high, but as we said, it is increasing over the 10 years, what we're looking for. Just be sure that you don't buy at the highest point during a year. Here's the market recovery with the good score, 15 points. Okay, ROE, return on equity. For this, look for around 16 and higher, and here this will tell you what you should look for, so 16 and higher over a 5-year period. So we can see that we're over 15, 16 on each of the years, which is a good sign. However, it does seem like it has been declining over the 5 years, so that's something to watch if this trend continues, and then you should find out why the return on equity is declining over the years. Return on invested capital, same thing, we're going to look for around 16 or more, and we could see here that around 2015, 2016, the scores were good, and around 2018. However, it has dipped below 16. It's gone down to around 13.5 and around 13 in 2017 and 2019 respectively. So this is something also that we want to watch out for. As with the return on equity, the return on invested capital also seems to be declining some. So just keep an eye on that. Not terrible, but it's not great at the same time. It could use improvement. So far the price upward trend was good. The earnings were good. Market recovery is good. Return on equity is good. However, it is declining, so watch for that. Return on invested capital could use improvement. Gross margin. Okay, so we look for 30 and above for this, and it has maintained 30 and above, so that's good. There's a little bit of variance here, but not very much at all, so it's been pretty stable. You can see it stayed between 32.6 and 33.4 or 34, so not much movement at all. So I would say it's pretty stable in keeping its margins. Okay, PEG ratio. So we're looking at between 0 and 1 here, and it has been above 1, so not exactly a big growth stock for long term, but it doesn't mean that you can't experience a lot of growth in 1 year. It's just saying that over a long term it's probably not going to be a huge growth stock. Okay, let's go back. Check out the value. So here we have a Buffett valuation comparison method, and you can just use this method to compare to other stocks. So negative 0.48, definitely some warning signs here that maybe in the future the stock might not be producing as well as we would like. And you can't just base all your decisions off of one metric here. You have to take into consideration many different valuation methods. So intrinsic value 76, and we had said that the stock price is around 99 right now, so this is also indicating that the stock is overpriced right now. Let's click on intrinsic value and see what's happening here with different valuation models. Okay, we can see here, wow, they're pretty much all around the same. So that's a good sign telling us that there's probably a lot of consistency. It's pretty accurate with the valuation then, if you have various valuation methods all producing about the same value. So we have 78 or 79 for price earnings, residual income around 74. This could be an indication that the stock has a lot of physical assets, probably their inventory of the metals they use. Discounted cash flow around 74, 75. So again, we come to 76. Again, a very good indication that this stock is overpriced right now. The market price is 99, and all of these are around mid 70s. If you look down here, you can see the different growths, and if there was a 10% growth rate, then we would expect that the stock would be valued around 94. If there was a 3% growth rate, then it'd be around 67. Okay, so you can kind of base this off of how you think the stock will perform over the next 5 years or so. I'm going to go back here and check out pricing. So pricing, we'll look at the 52-week midpoint. So it's around 87. This is also less than the current market price. So another indication the stock is overpriced at 87 versus 99. So we'd want to buy at least less than the midpoint, and hopefully if we could pick it up around the 52-week low, or if it falls below that, that would be a good time to buy. Miscellaneous fundamentals looks more at the balance sheet. So the balance sheet looks good overall. Debt to equity is 0.32, so this is less than 1, and that's what we look at. we want to make sure that the debt is less than the equity. So if the debt is less than the equity, it'll be less than 1. And that's what we like to see, that the company owns more than it owes. Okay, the P/E ratio, we look for under 16, and this is right around 17, so not bad at all. This could be a slight indication that the stock is overpriced, but it's not very high, so it's indicating maybe it's not that overpriced, or that usually the stock sells at a P/E ratio. The stock has a P/E ratio usually that is possibly under 16, and that's why it's showing up here. Okay, current ratio, it should be above 1, and it is 1.57, and current ratio just basically tells us that it has enough assets to cover its short-term liabilities. And you can just click here to see if you have any questions about it, what each of these means. You can just click on them and what we're looking for here in the numbers. Okay, then you did see here that the dividend, it pays a 1.81% dividend, so moderate dividend. So overall, TE Connectivity, as I said, I'm not that familiar with the company, just I know that they do some unique things and they're very innovative, and the products that they make for harsh environments. So this could give them some kind of competitive advantage. If you are going to invest in them, make sure you do your research about the company. But right now, according to this quick analysis that I just did, it appears that yes, the company is not selling at a bargain price right now. It is overpriced at $99 versus around 75% intrinsic value to around 80 some dollars for the estimated value. Okay, I hope you enjoy this analysis, and you can read my notes in the video description if you have questions.